Today we are going to talk about the Child Care Provider Expansion Initiative and review the reporting and monitoring process that recipients of funding will follow after receiving their award. This presentation will help you to better understand the Child Care Provider Expansion Initiative reporting and monitoring process, what types of expenses are considered allowable for coverage by the initiative, how to make sure you have proper documentation of these expenses, and what to expect during the reporting and monitoring process. The purpose of the reporting and monitoring process is to understand how funds were most needed and used, if applicants participated in various support activities, and which categories of allowable expenses recipients spend their funding on. Recipients of Child Care Provider Expansion Initiative funding will be required to comply with reporting of how their funds were spent, and those selected for monitoring will also need to supply documentation of their spending. All recipients must submit 2 reports, an interim report and a final report, to keep their award status in good standing, while only some recipients will be selected for monitoring. Child care businesses may use funding towards allowable expenses incurred between March 1st of 2022 and March 31st of 2024. While the list of specific expenses you have may vary, the following categories are considered allowable for coverage with the Child Care Provider Expansion Initiative funding. Indoor equipment and furnishings, such as cribs, changing tables, bookshelves, chairs, tables, and rugs. Office furnishings and equipment, such as desks, chairs, filing cabinets, computers, software, and printers. Outdoor equipment, like playgrounds, shade structures, toys, balls, fencing, and infant strollers. Kitchen supplies, such as appliances, cookware, and serving items. Food is not included. And safety supplies, like fire extinguishers, smoke detectors, carbon monoxide detectors, baby gates, outlet covers, and secure entry systems. Education supplies or classroom materials, such as curriculum, books, and toys. Permitting fees, for example, for HHSC CCR or as related to inspections. Staffing costs to support program operation while ramping up to full or expanded enrollment. We will give more information on how you can use initiative funds for staffing on the next slide. Outreach costs associated with recruitment of families and staff. Minor renovations, such as exterior or interior painting, lighting, plumbing, or kitchen fixtures, trim work, and minor carpentry, flooring replacement and improvements. It is important to note that you cannot use your funds for new construction or renovations, which would mean that you are changing the structure of a building or significantly changing the purpose of a space. Your monthly recurring property occupancy fees. This includes your rent or mortgage for your program site and the cost of utilities at your program site, such as electricity and water. Down payments, voluntary excess mortgage payments, security deposits, and any one-time payments associated with entering a lease or purchasing a property are not allowable uses of funds. Finally, it is important to know that any expenses that have been paid for by another stimulus relief funding program or other public funding source, like the Child Care Relief Fund, are ineligible. To comply with required reporting and monitoring, you will need documentation of your spending. You are required to maintain spending records for 3 years after funding is awarded. This includes receipts, invoices, and other documentation that support how all funds were expended. While interim and final reports will not require any documentation to be submitted, those selected for monitoring will be required to submit full documentation of how their award was spent. In addition to keeping your documentation organized in advance of monitoring requests, it is also a good idea to gather receipts for more expenses that you claimed reimbursement for, so you are covered if any of your expenses are ineligible. Before spending your funding, we recommend that you set up a record-keeping system to properly document all past and future expenses. Follow these simple steps to gather and maintain documentation needed for reporting and monitoring. Next, we will look at each step in a little more depth. First, go month by month through your records beginning March 1st of 2022 to review expenses for your business. You will want to look at receipts you have already collected, such as your business credit card bills, app-based system payments like Venmo, Zelle, PayPal, and Square Cash, business bank statements and canceled checks, and third-party payroll systems like ADP, Gusto, or Paychex. You will need a proof of payment like a receipt, or an invoice marked paid for every cost that you are receiving reimbursement for through the Child Care Provider Expansion Initiative. Ensure that the documentation shows exactly what goods or services were purchased. Be sure to collect information about the following common business expenses for each month. Facilities maintenance. The actual amount spent on minor renovations to improve your facility or increase safety. Home-based family child care providers may need to use the time-space calculation to determine the percentage of facilities maintenance that is allocated towards business use. Payroll, employment, and personnel costs. This includes those for W-2 employees, including yourself, and employer payments for benefits, such as retirement or healthcare. If you're a sole proprietor paying yourself, you need to have proof of payment such as payroll report or pay by check, bank transfer, or app payment where it documents that this was payroll for a given period in the memo section, and that it does not exceed revenue for the same time period. For example, if you took in $1,000 for the month in revenue, you could not claim payroll of $1,500. Contractors, often called 1099 employees, can be included in your costs, but make sure they are appropriately classified as contractors. You can also include employer benefit costs for company-sponsored programs offered to all employees and employer payroll taxes for unemployment insurance and other programs. Classroom and office supplies. This includes items necessary for your childcare business such as paper products, children's toys or books, as well as business software and technology upgrades. Outreach costs. Include costs for both physical outreach such as flyers or postcards, as well as the cost for digital outreach such as online ads or job announcements. Remember, outreach can include efforts made to attract new staff to your business as well as marketing for new families. Business use of home. For family child care homes, the time-space calculation can help calculate the percentage of certain costs that can be covered by initiative funding. To prepare for reimbursement of these costs, whether you rent or own your home, there are 2 steps you need to take. 1. Determine the space and time of your home used for childcare, and 2. Determine allowable expenses related to providing care in your home. Prorating costs. For businesses that are a subunit of a larger entity, you may need to prorate your costs to determine what amount can be covered by initiative funding. This can be done by calculating the percentage of total square footage of facilities, total revenue, or total costs. Once you have a clear picture of the expenses you've incurred since March 1st of 2022, make sure that you set up a record-keeping system to properly document all past and future expenses. You must keep all your receipts for costs incurred between March 1st of 2022 and the 6 months after your final award. A receipt or other proof of payment should show that you paid the expense, what you paid for, unless it is very clear like utility payment, the amount you paid, the date you paid it, and a description of the item purchased or service received. Some examples of valid receipts of proof of payment are an itemized receipt from Target or Walmart, a paid invoice for painting from a contractor, a summary report from your payroll company. You may find it helpful to begin with larger allowable expenses first, as several larger expenses like payroll will take less time than finding multiple individual receipts for smaller expenses like classroom supplies. In some cases, TWC may find some of your expenses to be ineligible for coverage by the initiative. For this reason, we recommend gathering more receipts than you will need just in case some of your costs are not allowable. Remember, TWC does not want to take back your money, so having backup costs will be helpful for everyone involved. Before you apply for funding, create a digital backup of your receipts and proofs of payment by taking pictures or scanning the documentation if possible. You need to keep your receipts for 3 years, so this will provide a backup in case something happens to the original hard copies of your receipts. Be sure you save all your digital documents in the same place, just like you would your hard copies. All scanned files can be saved in the same folder. If you take photos on your mobile device, all photos can be saved to the same photo album. Recipients of the Child Care Provider Expansion Initiative funding will be required to comply with reporting and monitoring of how their funds were spent. All applicants will complete an interim and a final report, but the timing of your report due dates will depend on the awards you receive. For recipients who receive both Startup and Initial Operating Award funding, interim reporting will be due before Initial Operating Award funding is issued, and final reporting will be due after that funding has been received. Recipients who are only receiving Initial Operating Award funding will need to complete both interim and final reports after they have received their award. Your interim and final reporting dates will be included in your initial award agreement. If you have already received your award agreement and your interim and final reporting dates were not included, you will receive them via email. As your reporting date approaches, you will be first notified by email from expansion@civstrat.com approximately 1 week prior to your reporting date. This email will include a link to your form as well with instructions on how to submit your report. Second, the reporting form will include questions about your actual and anticipated spending within allowable expense categories, as well as some questions about the progress of your expansion project. Documentation of your expenses will not be required at this time. Third, our team will review your responses and provide additional direction and instruction as appropriate based on the information provided in the interim report. If necessary, an expansion coach will contact you to address any questions or concerns. It is important to note that submitting reports beyond your assigned due date may result in delayed issuance of subsequent awards or the potential recoupment of funds. We will now go over the final reporting and monitoring process. Some applicants will be selected for monitoring and will be required to complete a monitoring survey and submit documentation of their award spending. If selected, the monitoring team will review your survey responses and submit documentation. If needed, a call will be scheduled to discuss any questions or concerns that arise during the review. Your submission will be reviewed to ensure that all expenses are allowable, documentation is sufficient, and spending amounts add up to your total received award. Once all documentation has been received and all information has been provided, you will receive an email from expansion@civstrat.com notifying you that your expansion initiative monitoring and reporting is complete. In some cases, the monitoring team may find some of your expenses to be ineligible for coverage by the initiative. Just in case, make sure you are keeping good records and saving all documentation of your spending. Next, make sure you keep more receipts than you will need just in case some of your costs are not allowed. Finally, don't worry if after all of that some of your expenses are found ineligible. Talk with the monitoring team about your spending and expenses to figure out what other costs you can use instead. Need additional help? There are many helpful resource guides available on childcare.texas.gov. Learn more in our monitoring guide and look for upcoming group coaching sessions.